you'll see here that in last night's tweet, if we find the Cadwell bid into the London Open, well, the pound CAD dropping as the Cadwell bid into the London Open, we'll obviously be looking to buy that for a bit of business, right? So we tweeted it out last night. So you already had that trade in your possession. You already knew what you should be doing. You're watching the London Open. Well, here's the London Open coming in here, buying into the dips, and simply just making the easy money. So that's what we've had. We've obviously not got any data out until 14:45 for the final PMIs. The Canadian rate decision at 14:45, the non-manufacturing PMIs at 1500 hours, and then, of course, your weekly crude numbers. And if you look at the headlines, we've got a draw, bullish, and we've got a build, bearish. So what kind of trade have we got possibly today? A bullish draw, a bearish detail. It's our favorite, Greg. What's our favorite? Guess what we love? We love the boobies. So we've got the possible booby today. And what does that mean? Well, that means that obviously with the headline, if it turns out to be a good headline, like a draw of that, then of course the oil price may pop buy side. And if we pop the buy side trade on, then of course we'll be looking for those top lines to maybe sell back into this draw that might develop from these distillates and gasoline numbers. So based on the headlines that we've got, this could be one of those trades that we sell rallies. If it plays out, that's of course, if it plays out, we're selling rallies. Now we could also have massive numbers here and smaller numbers here, in which case the boo part might push the price clean through the top edges, as you well know. I have to bear that in mind. That's why we always watch the devil in the detail, and then we try and confirm that detail by looking at the refinery utilization expected to show a pop of 0.4. So we'll watch for that at 3:30. We'll see if we can get a handle on this and see if there's going to be any great trade levels to deal from. And again, we watch those dealer levels, especially on those outside markets. Remember, the dealer levels, not necessarily based on the dealer inventories. The dealer levels are not market maker levels. They're commercial trade levels. So that commercial liquidity is acting always as a magnetic draw in the initial stages of that data release. And once we've got that draw, we can then trade the draw storyline based on how the data does fall into place. If we get exactly that storyline or we get the exact opposite, we can then take advantage of that knowledge. But with this forecast, of course, you'd imagine that oil will be relatively bullish during the day up to that point. And if oil is relatively bullish during the day up to that point, we acknowledge it. We acknowledge it for what it is, exactly what you thought you were going to get. So welcome in, guys. I hope you're all good, ready to rock and roll. If you haven't done it already, make sure you put your key levels on your charts. I've covered that already. I don't necessarily intend to cover it again. Welcome in, guys. Welcome in.